Hi, when should you take profits? We are currently with Bitcoin again above the 50,000. With Cardano, we are also at an all-time high. And within a bit over 1 month, Ethereum went up by 86%. So when should you sell? Now the answer to this question is very nuanced. It's not simply sell whenever the price is up, buy whenever the price fell somewhat from the top, because you can never know when the price stops rising, right? So it's impossible to time this perfectly. And so when your price is moving like this and you can't really tell where the top is, you have to make a decision, right? Very, very few people will be able to sell over here. It's basically impossible to simply buy, and then know exactly at this point that this is the peak and that you should sell over there. Trying to achieve this and trying to time this point in the market is not going to do you any favor. And so you have to decide, do you rather want to sell over here? Or do you consider it's better to sell over here? Because those approaches, they are very different, right? If you sell over here, you sell into the bull market and you accept the profits and you don't look anymore at what the price is doing afterwards. You're simply happy with what you got. On the other hand, if you decide to sell over here, you could always look at it from the relative point where the price used to be and then beat yourself up that you're down maybe another 20 or 30% from the high where you could have sold, at least in theory. And so we all know these stories, right? We know of the people that regret that they sold Bitcoin at like $2 or $5 or $10 and they would be billionaires if they just held onto their Bitcoin. But we also know the stories of people that got really rich on paper, never took any profits, and for a few days they were multimillionaires, but then the market, it crashed down, and so they never really realized any of their gains. So obviously you don't want both, right? But you can't exit over here. So what do you do? The way I approach this personally is I think of my wealth as a portfolio. And that portfolio has different assets, right? It has property, it has stocks, it has crypto, and maybe it has also some cash or stable coins. Now, one way to navigate this is simply to think of what's your ideal allocation to crypto. You really want to think about this hard. If you're very young, you might want to allocate more, obviously. If you're older and close to retirement, you might want to allocate less as a percentage of your overall wealth. But you really should think about it, right? Do you want to have, say, 1% of all of your money in crypto? And then when crypto really goes through the roof by 10x, now you've got 10% in crypto, but it didn't really change your life in any way, even though you really bet on the right asset class. So do you want to be that guy? Probably not. So 1% for most people is probably not going to work. But you also don't want to be the person that has 80 or 90% of their money in crypto, because what then happens is that you will be on scared money. So most of your wealth is in crypto, and then suddenly a flash crash happens, similar to the Corona crash, right? Let's look at this. Let's zoom in here a little bit and refresh our brains. Let's look at Bitcoin. From the 15th of February 2000 to the 6th of March, we went down by almost 50%. Actually, when we look at the intraday movements, we went down more than 50%. Look at this, temporarily, you were down 60% within less than a week. This is totally possible in crypto. And this is when Bitcoin was at 9,000, right? It's not at the 50,000 where it is today, but still, this is quite a significant market cap. So imagine you are in that situation and you've got 80% of your money in crypto, and suddenly you lost half of all your wealth within a week. What would you do? Would you put in the remaining 20% and take advantage of these low prices? Probably not. You're probably going to be scared to death. You might even try to sell something to rescue those last few dollars that you've got left. Panic selling is a real thing. And so you don't want to be on scared money either. You want to find out what is your psychologically acceptable allocation to crypto that gives you enough upside that in case it does work out, it has an impact on your wealth, but that doesn't give you too much exposure that you will be scared in case we do see a major drop. So toy around with your own numbers, try to find out where you lie on the risk spectrum. And this is, I think, the very first thing you need to do to find out when to buy and when to sell. This is, I think, really, really useful. And so since you can't time the market perfectly, you can't really tell, are we going up or down? You can only guess a general sentiment. You need to diversify, and not in the common sense of like diversifying across different crypto assets or diversifying across different asset classes, that you have some crypto and some stocks, but I mean diversifying over time, not lump summing everything in at one point and then potentially falling really hard. Because what can happen, and what's actually very often happening, is that excitement is the highest when prices are comparatively high. So when you look at trading volume, right, this is when a lot of action is happening, when the transaction fees for Bitcoin are also pretty high, the prices they are high, there's a lot of news going around, and so all of this attention, it leads to high prices. And if you lump sum in everything from the start, it's very likely that you're going to do this when everybody talks about crypto. It's unlikely that you will lump sum everything in when nobody talks about crypto, when prices are depressed and everybody thinks it's incredibly dangerous to own crypto, right? At this time over here, nobody was talking about crypto. You're almost embarrassed to buy over here. You wouldn't tell this everyone because everybody simply thought the hype is over, Bitcoin won't recover anymore, Bitcoin is going to zero. Feel free to search this on YouTube, Bitcoin going to zero, that's pretty entertaining. And so it's unlikely you will find that kind of point in time in the market cycle where you will be able, or where you will be willing to go all in. And so just a dollar cost average in. Buy regularly a somewhat fixed amount. You might also do this in a kind of flexible way. If we do go down a bit more, you might consider buying a bit more for a certain month. So maybe every month, just buy some crypto until you have reached your ideal allocation for crypto. So for my personal taste, I am fairly aggressive. I've got 40 to 60% of my net worth in crypto, considering everything, considering stocks, property. I've got that much in crypto because I'm fairly young and I can take the volatility. So I am aggressive. But your allocation might be completely different, right? Yours might be maybe between 5 to 10%. And maybe you are fine on your 5% investment if it goes up by 5 or 10x, and your investment strategy is rather geared towards preserving wealth than building or growing wealth. So simply dollar cost average in, buy some every month until you reach your level. And if it drops, simply restart dollar cost averaging again. If it goes up, simply stop buying, right? Because now, say you're at 40% allocation, now you're riding the wave, the price goes up, and sooner or later you will automatically hit your upper band of what you feel comfortable with holding in crypto, right? The prices there are really, really dynamic. If you buy in at 10K several times every month and you've hit your target allocation, very quickly you will have the upper band of your target allocation reached, and then it makes sense to start selling and take some profit, simply psychologically speaking, right? You don't want to be the person that's the millionaire on paper at a certain point in time and never really took any profits. Now, when you sell, there's something funny going on. Look at this long-term Bitcoin price chart, right? It's more than 10 years of data with some imaginary trend lines over here. Who knows how valid those are? But what you can notice is that when you compare the price movements, is that Bitcoin tends to be at this lower trend line for a much longer period of time compared to this upper trend line, right? So we reach those elevated prices only a very brief period of time, but there's much more time to dollar cost average in, to buy. And so you need to be mentally prepared for this, right? So say you buy $1,000 every month. You buy. And then let's say these are 2 years, right? You've got 24K invested. It already went up a little bit, right? So maybe by this point, you're rather at like 40K or something. So you put in 1K every month. You're now suddenly at 40K, and now the rally starts. Now, when you start selling, you have to sell really high amounts because obviously the gains are high, right? You tend to get into these 10x movements, but also because you've got way less time. So when you've got, say, 24 data points here at low price levels where you can buy, but maybe only 2 or 3 data points where you can sell really at very high prices, you have to be more aggressive in selling. So suddenly you go from these 40K to 80k to 160k, you better take some chips off the table, because if it does go down, you haven't won anything, right? This is exactly what happened here in June 2019. If you buy, and then here get this additional 50% drop and you continue buying and then it goes up by 170%. If you never sell, you completely missed out on this rally over here. You have to sell. And obviously you can look at this in the very long term and you can say, okay, I just continue buying and then sell at the very end. But you're missing out on something, right? If you start selling already over here, you could purchase for a much lower price later down the road. This does not have to happen, but simply psychologically speaking, if you've got your ideal crypto allocation and you've set this for yourself, you've got a way easier way to navigate this. You're not really looking at the price that much anymore. You're not really that much focused anymore on timing the market perfectly, because nobody can time it perfectly. You're much more focused on doing what's right for you, what's right for your risk appetite, for your portfolio, for your target returns. And so when we are in a trend like this, right, and you're wondering, should I now DCA in or DCA out? It's hard to figure these tops over here, right? This is very hard to time, but it is relatively straightforward to distinguish if we are now in a bear market or if we are now in a bull market. That's relatively straightforward. There's a lot of ways to do this, right? These imaginary lines is one simple way. You can also go to look into bitcoin.com. There's a lot of macro charts over here. For example, very common again, the logarithmic regression line, where we can see we are pretty much in the middle of that long-term regression line. We can also use other indicators, the realized HODL ratio, where we are not at the top yet, but where we are also not at the bottom yet. Unrealized profit and loss is another approach. So there's a lot of ways to time the general macro trend. And you don't have to be a genius to figure this out, right? If coins such as CumRocket or SafeMoon, they are gaining, then you're probably not in a bear market. But if you see articles everywhere of like Bitcoin is dead, or if simply there's no attention on crypto at all, nobody searches for it, right? That's another approach. You can just simply go to Google Trends and check how much is Bitcoin searched. If you see interest is relatively low, then we are probably not in a hype phase. So this is how you can kind of in general time the macro cycles, get certain different inputs, and usually a lot of those indicators, they say the same things. It's rarely that you've got 10 indicators and 5 of them say we're in a bull market, the other 5 say we're in a bear market. Usually, no matter what you look at, you get similar results. And so you can decide based on this, should you DCA in, should you DCA out? You can look at your ideal crypto allocation. And so just by combining all of those approaches, you can make an individual decision for yourself if it makes sense to take profits. I don't think that there is a universal answer to this. You really need to have your own strategy, your own approach, and only then I think you can get the perfect outcome for you. If you enjoyed this video, please give this a like. YouTube will help the channel grow. And if you haven't yet, feel free to subscribe as well. I publish videos every single day. Last but not least, we've got a Telegram channel. We are almost 400 people right now. Feel free to join us as well. We enjoy discussing crypto over there. It's completely spam free. Would be great to see you there. See you next time. Bye-bye.